Hey guys, what's up? It's Patricia here with Gary's Pool and Patio, and I'm coming to you today with Mr. John Hudson, H&M Mortgage, and we're going to talk some more about swimming pool financing. Now, I know we've talked about this in several different of our Pool Talk with Trish videos, and I want to ask John specifically because we're going to talk about something a little bit different. We've talked a lot about unsecured loans. John, I want you to fill us in, fill our customers in on some of the options that are out there for swimming pool financing that are your secured loans and how that differs.
Absolutely. Well, first and foremost, Patricia, I appreciate y'all taking the time today. I think I don't think I know this. There's a huge opportunity right now around helping homeowners to improve the homes that they already love instead of feeling forced to move, especially right as we come into the pool season, so to speak. I mean, let's face it, there's a lot of families in San Antonio right now that are sitting on low mortgage rates and strong equity and a growing lifestyle needs, but they don't have a pool just yet.
And they want one because it started getting warm outside again. It's here.
That's exactly right. So I think the goal, right, is that because the market has shifted from move up buyers to improve in place homeowners.
Yeah, so we've talked on my series. I have talked a lot already and shared information about some of the unsecured options and kind of what that looks like, what the homeowners need to be prepared for when they go, kind of research, getting into an unsecured loan, what interest rates look like, what all they
Yep.
can roll into the loan. Tell us what's out there as far as options with the secured loans, because that can be very different and there can be some benefits to them,
Uh,
right?
Well, absolutely, right. So, and there's several options right there. So, I'm just going to kind of bullet point through some of these. So, first and foremost, right, would be if you're building a new house, right, and you have a construction loan to build that house, then you could also include the pool financing in that. I mean, obviously, right, the best time to finance a pool is during the original construction, right? You get one loan; it's a cleaner process, and it's just all together in one. If there's somebody out there that knows that they want a pool and they're thinking of building a house, the easiest thing to do is simply roll it into the construction financing. Like I said, it's usually the cleanest option there too. But there's a lot of people, like I said earlier, that are sitting in their current house with a lower fixed interest rate and a lot of equity. So, but they're wondering what kind of other options do they have out there. So the next one is renovation loans. A lot of folks out there don't realize that, pools can be financed through renovation. A lot of people just think that renovation loans are just for kitchens or roofs, but there's a lot of situations where outdoor improvements can be included too. So it really kind of, I would only recommend the renovation loan if they were doing like full out renovation, right, where we're including a little bit of everything, so to speak. But probably the biggest opportunity for a lot of people out there is simply a home equity line of credit, a second lien. A lot of homeowners, they don't need a new house. They just need a better backyard. That's what I like to say. And so with that, what we're able to do, or what a family's able to do, if they do have that lower fixed interest rate for their first lien, right? Say they bought their house during the COVID era and they lucked out and got one of the 2.99% mortgages that's out there. Well, if that's the case, then and they have equity in the property, then we can help them facilitate a second lien that may, yes, will be at a higher interest rate, but you're not touching the first lien, right? So that's still fixed at the lower interest rate. And the beauty about the HELOC too is that you could pay it off at any time. And more importantly, the minimum payments that are out there are going to be amortized over 30 years.
Wow. So how much is the
So
payment
they're
look
able
like
to
though?
get a much lower interest rate and much lower payment than they would with perhaps alternative financing. So the main thing I would just throw out there with the HELOCs or with anybody wanting to look at a pool is, um, you know, if you're a homeowner, are you hesitant about touching the current mortgage? And they're almost certainly going to say yes.
Okay, so you said home equity line of credit. How is that different than a home improvement loan?
Well, right. So the home improvement loan, for the most part, is going to encompass the first lien as well. So it just kind of all depends. So if somebody had bought their house just even in the last couple of years, and let's say that they have a interest rate that might be hovering around 6%, well, then, possibly doing the refinance with the home improvement loan, we're going to be able to keep their interest rate about the same. But now we've just added on. The real big advantage comes for the second liens when they have a lower fixed rate mortgage.
Okay, so let's backstep just a little bit because I know we
Yeah,
started off
sure.
saying unsecured versus secured. Let's clarify with a secured loan, we are needing equity in the house, correct?
Yes,
Okay.
yes. There's going to be that you're going to need to have equity in the property.
Okay, so several different options, whether they're doing a renovation loan,
Mhm.
whether they're doing a home equity line of credit, they can also look at a home improvement loan, and each of these is confirming they've got equity in the home, and that is being used basically to secure that loan or that financing, correct?
That that is correct. Now, so let me throw out a couple things. With a home equity line of credit, or even, and I'm sorry, I'm just going to skip forward a little bit and go to the last little bullet point that I had, and that was just a traditional Texas cash out refinance.
Okay.
So Texas state law requires that if you're going to pull equity out of your property, right, you're actually getting cash out, then you need to have at least 80% or a maximum loan to value of 80%. So the borrowers have to have at least 20% equity in there. Now, in the case of a home improvement loan, well, we're going to be able to use the appraised value when we do our calculations there based on the improvement, which is adding the pool into the property.
The
So
ARV, the after repair value.
that is correct.
Pool
That is
obviously being the
correct.
repair to
Mhm.
that backyard that is in desperate need of an oasis makeover.
That's right. That's right. So it's just, one thing I just to clarify, right? I mean, every family's financial situation is a little bit different. And I would say that, in the case of, and this is something that is absolutely worth looking at, if you have a family that wants to add a pool, and let's say they have a couple car payments and some credit cards and stuff like that, well, then you know what? Maybe doing the home and they have a ton of equity, then maybe the actual cash out refinance is the best option there. But of course, the math just has to make sense. Or if you have somebody that has that super low first lien, then the home equity line of credit is probably going to make the most sense. But in cases where, let's say they bought their house just even in the last couple of years, then they're going to want to be able to use for the appraised value that what we just referred to as the ARV, right, the after repair value. Then in that case, the home improvement loan is going to be the probably the better option for them.
So with your secured loans versus your unsecured loans,
Mhm.
um, obviously the securing it part is a big difference. Is there a big difference in, say, the interest rate that you typically see between those two types of loans?
Oh, for sure. I mean, the interest rates on mortgages are going to be fixed for and amortized, right, up to 30 years, and they're going to be much lower than probably a installment loan. And the whole reason is that there's security behind it. An installment loan, somebody just may not pay their bills, and that's it. The creditor can't come back on anything. And versus a mortgage, if you don't pay your bills, well, there's an asset that's backed behind it.
Gotcha. So, using equity to secure the loan, you can potentially get a much longer term as well as a lower interest rate. But obviously, you got to have the equity. So
Yep.
the biggest thing I want homeowners to understand is there's a lot of options out there to finance swimming pools.
There really is. And so, it all kind of starts with, like, do we move or do we improve? And so and that's probably a great way to look at it and kind of go down the checklist. If you think you've outgrown the house, then you know what? Maybe we want to build a house. And if we want to build a house, then we can get a construction loan and the pool loan and combine it all into one, and there you go. Or, if you're in your current home and you know what? And you're happy there, but you want, like you said, that backyard oasis. Well, then absolutely, there's some great financing options there as well. So yeah, so there you go.
Excellent. Well, good stuff. I appreciate you coming on with me. We're going to have to do this again soon and take a deeper dive, no pun intended, into some of those different programs to
Yeah.
really get to the meat and potatoes of what the homeowners can expect or look for when they're looking into each of those different types of programs.
Yeah, no, 100%. And look, the reality is, of course, we want families to make financially responsible decisions. We also want families to realize that they do have opportunities out there to, well, basically do what they want. And so our job is to simply help those families improve their quality of life without forcing them to move. And sometimes just adding a backyard oasis is just that. So there you go.
Lots and lots of ways to get swimming. Well, I appreciate it, John,
Yes.
and I'll see you on the next video.
All right. Awesome. Thanks, Patricia.